What's going on, guys? It's Eric. Um, you may know me as Miami Eric inside the BRT chat room here. Today, I'm going to be going over a topic that people have been asking me about for a couple minutes now. Basically, how I find price levels. Price levels are going to be major support or major resistance on the charts. Just based on what I personally see, how I find levels, and these turn into price targets. Entry targets, profit targets, just overall price targets. Um, let's take a look real quick. So you see these green lines. These green lines are going to be just major areas for me. That's how I graph it out. I find a major area. I'll go to drawings, drawing tools, price level, double click on that area, adjust it accordingly to wherever the value needs to be, and then you're good to go. I'm going to remove that one because it doesn't mean anything to me. Now, as you know, this is open price, this is close price. Again, blue is open, red is close. I do sometimes have colors for my price levels. Like a gold will be a profit take, a partial, what have you. Green is adding shares or just overall target to watch. Let's get into this though, shall we? Let's look at why Facebook reacted. I mean, these are plot lines that I drew out weeks ago, as you can see. About a week ago, probably even. I don't even know. Yeah, look at that. So these are major levels from the past. You see a double top right here? So that's a big level now. Let's see if it acts around it again. Oh, look, it's acting around it again, acts around it again, acts around it again. Now today, does the same thing. It responds around that level. Boom, boom, falls under. Hits another level that's already pre-drawn out from history. So these are levels that I draw. And it's always, you know, they're random per se, but, or they're not random, but they're drawn every few days on things that I see as major levels. And look at this. Let's see where this guy hit. It literally came all the way down to and bounced back up. Oh, look, it's that same level. Here, let's draw this out. Let's make this a different color. Let's edit the properties here. Let's make it purple for now, just to show. This purple one, boom, look at that. It's now acting as a major level. Let's do this one. We're going to make this one a light purple. See where that goes off to. Okay. So that was a major resistance, and that became a resistance level, which turned into a support. Once it broke through that support, or once it showed support there, it kept going up and up and up. So that's what I thought a major level was. Bounce touched it. Look at that. After it failed the support, what I thought was support for this period of time, it fell through the floor. And again, it plays around that level again. Into the next day, plays around these levels. Plays around these levels. Support, resistance. It plays around these levels. It goes above this level, and then it finds the 200 EMA, the 100 EMAs, finds those support, and this, it creates a little high here early in the morning. So that's why I drew a line. It was double top. I believe I shorted that down, if I remember correctly, actually, yeah. I think I shorted that down to the 50. I could have shorted down to the 200, but 50 was enough. I take my profit and I leave. So this is, as you can see, like look at these levels. This is how I draw it. I just simply chart it out, and then I see how the price action is when it reaches those levels per se. came down tested. Like when it fails support, it goes to the previous support or resistance, or basically the previous level. And I draw these out so I know, oh wow, it cracked through the low a day. What's the next target that it was showing support at? That's where you could try to shoot for. You know, like if it fails 141.75 here, you know this down here is the next target. So you can short it, risk say right above this level. Yeah, let's get a little bit closer. So say you wanted to, you saw it break low a day, or even you got under the VWAP here. You got the VWAP failure play. You could lock in profits around here. You can wait till a low day break to reshort. And look at this. This is perfect. You see this previous line that was drawn in, it's now failing that line. It retests that line 3 times. So you know this is a major, let me remove that. You know that this line right here is now a major area. Major area. So you can risk right above that line, basically. So let's do this. Let's find out how much we're risking and what our reward or the next target area is going to be. Let's see. You remember I always say risk a little bit more with Facebook. So say this is 9 cents, we're going to risk 30 cents. Or even, we could go up to the 50 if we wanted to, 60 cents. And then your profit target is the previous level. So $4, $4 move. See what you're seeing down here? This is what happens with institutions and just big money. They see these levels as well. And so they cover before those levels, knowing that this level is going to be a major area. So they want to lock in their profits ahead of time. Now, the bigger the moves, because this is a big move. This is a really big move. It's a 4-point move in a day. The bigger the moves, the less chance it's going to fully go towards a level. Reason being, people want to lock in profits. They don't want to hold and wait for a couple more pennies. You know, 20 more cents on Facebook isn't a big deal. They want to lock in profits. So that's what happens. You see these people locking in ahead of time. They got in, you know, say they got in 350. Look at that. They might have bought or locked in around 250 down to 3 is probably their, probably 250 down to 350 was probably their profit area, because they're risking, you know, 30, 50 cents. If they're locking in $2.50 for every 50 cents risked, then they're just winning. You know, that's good trades. That's good risk management. So yeah, people are locking it in ahead of time. And so that's something you should do as well. I mean, once you get to that 3-to-1 level, lock a little bit in. Once you get to the 4-to-1, lock a little more in. Once you get to that 5-to-1, lock a little more in. But these are those are things you'll learn in time. At first, just focus on those levels. Focus on finding those levels. Try to lock in a little bit before sometimes. Try to, you know, learn the stocks you're playing, because every stock reacts differently. But these are the levels I find, you know. And look at that. It goes up to that level, fails under, fakes out a little, comes down, hits VWAP, comes down, tests that level, the previous level, like I said, comes down. You know, that's how they do. That's how they are. That's how stocks are. Today, I bought this because of this level here. I bought these. These were already graphed out. These 2 levels right here were already graphed out from all the way back here, which is back in November 23rd. It reacted to levels back on November 23rd. You know, I bought in here, rode up. You know, like, I sold half, and then I got out early. But that's all you got to do, guys. You don't have to find 500 different patterns with 500 different indicators. You know, you find the levels, you see how the price is reacting to those levels, and then you react towards how the price is reacting. Because the majority of stocks are going to respond with these levels the majority of the time. As long as it's not like a super low float, which, you know, anyone can squeeze you out if they have a big enough bankroll. If you have $1 million, you're going to control a low float, basically. This isn't the case with things like Facebook, with, you know, your Amazon, your MU. AMD's a little shaky here and there, but that's just because it's algo heaven. You know, these bigger names, they follow these levels. They see these levels. Other people see these levels. You know, computers scan and see these levels. So just graph it out, learn it over time, keep watching it, see what they're doing, see how each stock reacts. I like Facebook. I trade Facebook so much because I can repeat it over and over and over. This is a level from November 23rd. I can repeat the process from November 23rd, and it's I don't even know what date it is, the 19th. That's what I'm looking for, stuff I can repeat without having to kill myself trying to think about it. It's like the less I have to think during the trading day, the better. So I just graph it out ahead of time, make a plan. If it follows certain actions, I follow the plan. If it doesn't do what I think it's going to do, I don't take the trade. I wait until I find something that reacts how I think it's going to react. Then I take the trade based on my thesis. This is why I don't do much momentum trading. I do a lot of trend reversals. I do a lot of gap fills, stuff like that. But I will go a little bit more in depth with these in the future. However, again, just try to find these levels here like that, major areas. It takes some time to learn how to find them, but once you do, you'll start to see it more and more and more, easier and easier. And yeah, just put in the time. That's really what it is, because after a while, your eyes start to see these levels, and then you just graph it out so much easier. So much easier. So yeah, until the next time, guys, have a good one.